Good evening, guys. This is Market Matters. I'm Charlotte Chong, joined by Chuang. Now, for company in the news, we are looking at ECM Libra Financial Group Bhd. The news on this company is its shares are suspended today at 9 a.m. this morning because of some news coming out from Bursa Malaysia.
Yeah, that's right. They've received notice of a potential mandatory general offer, and it's come from the director and shareholder Lim Kian Onn. The vendors potentially are companies like MCorp Group Bhd, Hikaya Jaya Sinjuan Bhd, Arab-Malaysian CSL Sinjuan Bhd, and Equity Vision Sinjuan Bhd. So which calls to mind, and this is all speculation, mind you, because it's not, she's actually not named in the announcement, is that whether Tan Sri Azman Hashim, he of Arab-Malaysian founder fame, is actually selling a stake in ECM Libra, because as we know, it's quite common knowledge that he's got to sell his shares in ECM Libra. He cannot hold significant stakes in two banks. ECM Libra is an investment bank.
And
he also still owns shares in Arab-Malaysian.
Now, this company, ECM Libra, it is yet to find a meaningful business after selling its investment bank in 2012. And I guess the sale to Kian Onn, this major shareholder, will give him time to look for a new business and out of the public eye, because they're going to take it private.
Correct. Right now, ECM Libra just runs a few small, wholesale funds and a couple of boutique private equity firms. Not big business. They've seen profit on the decline since then. So, if I was Kian Onn, well, I'm not, not first name basis with him, but the last traded price for ECM Libra was 33 cents, which if you compute at 33 cents versus the 74 million shares on offer, it's only 25 million ringgit.
So it's sort of like a carnival sales for him.
It's very cheap. It's very cheap. You've got an entity with an investment bank license, healthy balance sheet, and a pretty good name in terms of a franchise in the market.
Yeah, I believe that ECM Libra has a very good branding as well. Third quarter earnings, net profit down 93.3% to 1.4 million ringgit. Revenue down as well, 76.7% to 5.8 million ringgit.
That's because they don't have a meaningful business. But the interesting thing about this announcement is that it says that this transaction is dependent on conditions precedent. But the announcement doesn't say what these conditions are. So
we just wait and see what kind of conditions it's in this deal. Now, still involves 74.2 million shares. This value actually, the potential buyout at about 24.5 million ringgit if last price of 33 cents is taken, last traded at 33 cents. And like what you say, this appears cheap for Kian
That's
Onn.
right. Okay, so Lim Kian Onn currently owns about 24 million shares in ECM Libra. That's in November last year. Tan Sri Azman Hashim has about 15.2% in the company. And Datuk Kalimullah, formerly a Reuters journalist, and of course he also was, I think, former group editor of NST. And so he's got about 8% in ECM Libra. So it involves all these luminaries.
So we'll see how it goes then. Let's wrap up this segment. The company ECM Libra received a notice of potential MGO, and this MGO actually comes from its director Lim Kian Onn, with MCorp as one of the vendors. We asked, could this be banker and Arab-Malaysian founder Tan Sri Azman Hashim cashing out? Now let's move on to Broker's Call. Today we have Genting Malaysia. It closed 3.67% down at 4.20 ringgit, and we picked up two research reports, one by UOB Kay Hian and another one by RHB Research. UOB Kay Hian maintained a buy rating with lower TP of 4.6. RHB Research maintained a neutral rating with TP 4.46. Now, Genting Malaysia, actually, most of the analysts, they are surprised by Genting revealing that they are going to double their capex on GITP to 10 billion ringgit.
Yeah, so they're renovating the whole hill, right? And initially they told investors that they're going to be spending only 5 billion ringgit. And then out of the blue, they said to the fund managers, they say, hey, we're actually going to be spending 10.4 billion ringgit instead. Hotels, rooms, workers' quarters, you're going to be adding more floor space, etc. So although, and I'm going to be quoting RHB Research here, they reckon that although this news is actually quite positive over the long term because it's going to drive more visitors, they're quite concerned that this is all these delays in the launch of GITP, which is the integrated plan up on the hill.
Now, of course, UOB Kay Hian is more positive. They think that the capex of expansion, which will include a 20th Century Fox theme park, will inflate to 8 billion to 4 billion originally. And they think that so far, Genting Malaysia has incurred 1.5 billion on this deal. but they think that long term it will actually get more visitors.
So they've got to get there in the first place, and they've got to overcome those delays. So quite contrary to your UOB Kay Hian's ad view, RHB Research is neutral. It's been neutral on the stock since 2013 November. They have not changed their recommendation. They've been neutral on this stock for the longest time, at least 3 years, and they reckon that there could be potential risk for the business because there could be a hike in gaming taxes. And we've seen in Malaysia, the government is not afraid of introducing new legislation and new policy to make to boost its coffers. We've seen increases in tobacco excise duties. We've seen changes in excise duty computations for the brewers. We've seen increases in foreign worker levies for the manufacturers and plantation companies. It's because the government needs to fill its coffers, and that's why it's introducing these levies and these new taxes. And that's a potential risk to Genting Malaysia's business.
Now, coming back to Genting Malaysia, Genting Highlands EBITDA remains resilient, although UK operation actually still in red, but it turned profitable in the latest quarter, fourth quarter. However, they think the UK operation will continue to gain more momentum from overseas visitors. Now, so let's wrap up this segment. 3 reasons why it matters. Analysts are surprised by Genting's move on doubling its investment for Genting Integrated Tourism Plan, GITM, to 10 billion ringgit from 5 billion ringgit initially. UOB Kay Hian maintained a buy call with TP of 4.6. RHB Research maintained a neutral rating with TP of 4.46 ringgit. That's all we have today. If you need more information on the stocks that we have discussed, please pick up a copy of DH Financial Daily or DH Weekly, or visit www.dhmarkets.com. I'm Charlotte Chong, and he is Khoo Chuang. Thanks for watching.